Well, this is what happens when the Reserve Bank does what's entirely expected. Not much. The All Ordinaries Index went up a bit and the Aussie dollar went down a bit, recovered and then fell a bit more. The main surprise was that markets moved at all, although trading algorithms don't make money if markets don't move, so humans generally try to find an excuse to make them do something. Today's excuse was these words in the RBA statement. Underlying inflation is now expected to be around the midpoint of the 2 to 3% target range throughout much of the forecast period. In other words, victory has been declared. The RBA also released its statement on monetary policy, which assumes a cash rate of 3.2% by June next year, which is also what the market is predicting. The statement contained this graph of what they call the Business Liaison Uncertainty Index, which the RBA gets from talking to 270 businesses. And uncertainty among them is now above what it was in the pandemic. The reason the Australian dollar is a little higher than it was last night, having fallen at 2.30 today, is that it rose this morning as the US dollar fell in response to the rating agency Moody's first downgrade of America's credit rating in 108 years. The US bond yield also rose last night, but only to the level of last Wednesday, so not a crisis yet. The share market regained most of what it lost yesterday, with rises led by the banks and Telstra. The US market managed a small rise last night and Asian markets did likewise today. And on commodity markets, copper, oil and gold went up, iron ore fell. And that's finance.